Ansha, Bhakti ma'am also joined. Please make her the co-host.
Yes, ma'am.
Neha, make sure that all students join with their name and the course name both.
Yes,
Because we have to monitor the attendance also.
Yes, ma'am.
Yeah, we will wait till 9:40 and then we will start.
Okay, ma'am. Ma'am, will Pooja ma'am be joining us today?
Yeah, I just confirmed with her. I think she
Okay.
will join. Yeah, Neha, ma'am is joining in 2 minutes. Then we will start.
Okay, ma'am. Guys, before we begin, I request everyone to please change your usernames to your name along with your course. Thank you.
Good morning.
Good morning, ma'am.
Good morning,
Good
ma'am.
morning.
Very good morning, ma'am.
Good morning, ma'am.
Good morning.
Good morning, ma'am.
Good morning. So good to see Ansha and Neha back. I think these two have been getting up early for all of the students. Good morning, Bhakti. Good
Morning,
morning.
ma'am.
Yes.
Shall we start?
Yeah.
Okay. In the securities market, knowledge is the currency that separates successful investors from the rest. It is a reflection of human behavior where emotions often influence investment choices.
A very good morning to one and all present here. I am Ansha.
And I, Neha, are here to welcome you back to the Induction Lecture Series. Welcome to this remarkable series of knowledgeable lectures featuring our honorable guest who will undoubtedly enrich your wisdom. This unique platform offers you a chance to gain expert insights and be exposed to a plethora of new ideas.
I would now like to welcome our unending source of inspiration, determination, and perseverance, our backbone, the principal of HR College, Dr. Pooja Ramchandani.
Good morning and thank you, Ansha. Always she calls me the backbone and the great support of HR. But for me, my support and my heartbeat is my students. So good morning to all my dear brand ambassadors. Ansha and Neha especially, because these two have been from day one conducting these lecture series. And Dr. Rani, my vice principal, Professor Bhakti, who has given us today's speaker. Welcome, Mr. Nikhil from NISM. And special welcome to my dear brand ambassadors. Nikhilji, these are the first years who are joining in HR college, maybe after 2 years of junior college with us, or maybe altogether new in a family. They come with a great aspiration that HR is one of the best college in South Mumbai. And to prove that we are best, we have normally in the beginning of first years, we do few days of industry interaction to tell them about what they should, the career choices that they have made in form of courses that they have taken. Are they the right choices? Have they taken the right career path? And so we invite many stalwarts from different industries. And today we are making them aware of financial securities market. Money is something that we want to not live without, but we wanted to get everything in our lives. It is something that we want to have little spiritually because it helps us to live our life. But in our heart, everybody knows that we want more and more and more. Older days, people used to put their money into FDs and gold and real estate, and that was the safest gamble people used to play, where I want to only keep it in post offices or banks, my money is safe. Today, it has changed. Younger students, like an 18 or a 19 or a 20-year-old, do have their own demat accounts. Their parents are into stock markets. They know at younger age when they invest for a long term, say a 14 or a 15 or a 10-year plan, their wealth can grow. And that's how we want them to say start young. And today's session will tell students that yes, it is okay to party and waste money on DJs as well as on parties, but At the end of the day, ultimately, they have to take care of their family. It could be their parents, it could be their siblings, it could be their better halves, and in the near future, their children. It's good to splash money on clubs, on smoking, drinking, whatever, but at the end of the day, you need to go back to your family and say, what are you earning and giving back? And so is the lecture on financial securities market, which is a wide horizon today. And NISM has been a key player in making students train as well as learn about securities market. So welcoming Nikhil ji and my dear brand ambassadors, I'm so happy that at least some people have started their cameras. I would appreciate if majority start. Why? Because it's good for a speaker and a principal to know who are they speaking to, whether behind the camera is a real student or their parents who are learning on behalf of their students. We'll be happy if parents also learn, but would be glad if students do interact with the speakers and come on picture. It's okay wherever you're sitting. Even I'm sitting at my home. So relax. Nobody asks you what are you wearing, where are you sitting, what is your background. It could be even a film star's picture. It's okay, but at least come on camera. Learn interaction, because when your camera is on, you become a little formal and you're supposed to sit in a particular manner. So, dear brand ambassadors, one more lecture series of today, giving you a wide ocean of financial markets. And Neha and Ansha, over to you. And thanking Rani ma'am, Bhakti ma'am, and Nikhil ji for today's session. So, looking forward. Wishing you all the best.
Thank you so much, Pooja ma'am. Again, with all your motivational words, you definitely proved to be our backbone indeed. So now I would like to formally welcome our degree college vice principals, Dr. Naveen Punjabi, Dr. Rani Tyagi, and Dr. Jasbir Sodi, and all the other faculty members present out right here. We are so thrilled to have you here with us today.
I would now like to welcome Ms. Bhakti Mulchandani, Assistant Professor at HR College with over 12 years of teaching experience and 2 years of corporate experience. I call upon ma'am to please introduce our guest speaker for the day, Mr. Nikhil Shinde.
Thank you, Neha. Thank you, Neha and Ansha. Good morning, respected Principal Madam, to all the Vice Principals, my dear faculty members, and to my brand ambassadors, as Pooja ma'am rightly said. We welcome you for the Induction Lecture Series. So today's topic, which we are going through, is navigating the financial frontier, a comprehensive guide in the careers of securities market. So with us, we have Mr. Nikhil Shinde. I'm delighted to take an opportunity to introduce our guest speaker for the day. We are fortunate to have you, sir, as a guest speaker. You have immense, exceptional leadership qualities in the field of securities market, and he's a true inspiration for all of us. It's a great pleasure for me and our HR college to introduce our speaker for the day, Mr. Nikhil Shinde, who is the senior AGM of NISM, National Institute of Security Markets. He have taken an education institute to learn almost 2.5 lakh intermediaries through tie-ups with BSc, NSC, State Bank of India, to educate people, to create knowledge, to create awareness among individuals, to create awareness among young leaders, young entrepreneurs, and he have been a key pillar to educate these kind of people all over India. He's also a project management professional. So he came across with many new courses via which we people can train, and we can get a certification course, and we can have a hands-on experience in the field of financial markets. He is a renowned speaker in security markets and have an immense knowledge in cash and derivative segment. When it comes to mutual funds, investment advisor, portfolio management services, in every field he have done his expertise. Prior to being an AGM with NISM, he also worked with TCS, a well-known, renowned IT sector company. Okay, he worked as a digital marketer, web designer, and by passion, he loves cricket like anything. So I'm giving a brief introduction about him. There are a lot many other things which I can add on for Nikhil sir. So Nikhil sir, we kindly welcome you. We require your expertise. Our brand ambassador requires your expertise and inside knowledge, which is going to be the key learning and a valuable learning for today's session. Over to you, Nikhil sir.
Great. Thank you so much. I hope my voice is audible to each and every one of you. Just somebody can confirm that.
Yes, sir, you are audible.
Wonderful. Great and amazing audience. I think I can see we have more than 300 participants today, and great. I think most of you are from the first year of your respective courses, and I'm really thrilled to address you today. It's a great opportunity to be a part of this induction series, ma'am, and thank you for the opportunity. All right, so we will start today, and we will. I have a presentation with me. I'll probably just put it on screen in a while. I think another 40-45 minutes. I think we can go through this presentation. Just somebody, if you can confirm, can you see it on your screen now?
Yeah, it's visible, Nikhil.
Yes, sir.
Wonderful. Great. So thank you, ma'am, for the introduction also. And just briefly, I would like to give you a brief about my institute, which is the National Institute of Securities Market. It's a educational institute set up by the capital market regulator SEBI. All right. So I'm sure some of you may not have heard about NISM, but you would have definitely heard about SEBI, which is the capital market regulator in India. And this is one of the initiatives of a regulator to imbibe, to spread the financial market awareness, the securities market awareness among the general public. So this initiative started way back in 2006. We got operational in 2009, and thereafter there's been no looking back. We have launched more than about 23, 24 certifications in various areas of capital markets, and we will be talking about those certifications in a while as well. All right. So we are based out at Mumbai only, and there's a small place next to the Mumbai-Pune Expressway called Patalganga, where we have around 70 acres campus. That's where our headquarters is. I think last year, last year, some of your students paid a visit to our campus as well. I think the last I remember, I think it was a batch of 80 or 100 students. Yeah, it was a pleasure to host you guys, and look forward if some of you would be interested. Please feel free to visit NISM's campus as well. All right, so we will start with this presentation today. Before this presentation, generally what I do is I put this slide on, because this is probably the most important slide which I want when you are just starting with this presentation. I don't want you guys to miss this. SEBI in 2007, see, they came up with a regulation, and I'll just explain you this with some of the examples. Now, let's say, do you think, a doctor needs a license to operate in India? Forget about India, anywhere in the world?
Of course.
Right? Of course, a doctor needs a license to operate. Does a lawyer need a license to operate? Yes?
Absolutely.
Any particular reason? Why do you think doctors or lawyers, in some countries, even plumbers or, electricians also need a license to operate, right? Any idea why do you think this is essential?
Many copycats can arise.
Right. See, these professions are important, right? And like you said, many copycats can arise. Somebody may claim to be a doctor and probably give some other treatment. You may probably that may not be the right treatment for you. It could be it could even turn fatal for you, right? So these professions are very essential. And similarly in securities market also. In securities market, what do we do? When an investor comes to an intermediary, the investor wants to invest certain amount of money, his hard-earned money in the market, right? His purpose is to earn certain rate of return. That is his purpose. But if this money lands up in wrong hands, okay, maybe he's not a genuine doctor of money, but like you said, some copycat or somebody who is not an expert. What are the chances that the investor will not get the required return in the market? High chances, right? So, and these things have happened in the market, trust me. In a developing country like India, there are a lot of scams that we came across, right, in the past. I'm sure, over this course of BCom or BMM or BMS, whichever course you are taking, I'm sure you will learn about a lot of scams that happened in the Indian markets. And therefore, SEBI in 2007, they came up with this regulation called SEBI CAPSM regulation, Certification of Associated Persons in Securities Market. What this primarily means is anybody and everybody who is operating in the market, okay, it could be a broker, it could be a simple trader, he could be an advisor who is advising investors, or let's say he is a simple back office person who is just clearing and settling trades that happen daily in the market. Be it anybody who is working in the securities market industry today needs to have one certification or the other. There's at least one mandatory certification that the individual has to clear. Okay, that is what the meaning of this SEBI CAPSM regulation is. Okay, and that's the reason I don't want you to miss this. Gone are those days when you can simply pass out of your 3 years course, or you probably do an MBA, complete your 2 years MBA as well, and simply go to a bank or a securities market firm, and then you get interviewed, you get recruited, and you start your job. Today that doesn't happen, right? These firms will hire you depending on your talent, depending on your knowledge, depending on your skill set, but before they put you on job, you will be required to clear the respective certification. Okay, we will talk about these certifications in a while, right? Now that is how we increase. So SEBI, through these certifications and this regulation, they have increased the professionalism in the market. They try to increase the trust of the investors. All right, great. So what we do at NISM is primarily, we do the certifications. Okay? So this is School for Certification of Intermediaries, SCI, and this is the school that develops, they keeps these certifications updated, and they also deliver these certifications across the country. All right. We also do some other activities such as investor education. So on the investor, so certifications is on the intermediary side. Investor education, financial literacy, these are also some of the initiatives that NISM does. All right. We also work on corporate governance side. We also do a lot of academic courses, or rather, some short-term and long-term courses, different certification courses. If you go to NISM's website, you will find different academic programs also. So those are a part of the School for Securities Education. All right. Great. I hope everybody is with me. If you have any questions, please, you can use the chat box or just unmute yourself, and just if you feel you want to ask the question, please feel free and go ahead. All right. So let's see. What is securities market? I'm sure this is probably my not my first time, but maybe very few opportunities where I'm addressing the first year students. So let me just get an understanding from your side. What do you understand by securities market or capital markets? Both these terms are used interchangeably. What are securities market?
It's basically a market where securities, shares, debentures, bonds are traded.
All right. Anybody else? What do you understand by securities market? When we say securities market, what is the thing that comes to your mind?
Buying and trading of shares.
Buying and trading of shares. Wonderful. Anything else? Only shares?
Other financial instruments as well, like bonds, debentures, and others.
Correct. Right. So we have different products in this market. Okay. What basically securities market is? Let me just, go back one step and let me put a question this way. Who are the players in this market?
Retail investors,
Sir,
Yeah, retail
investors.
investors like
Foreign institutional investors, foreign portfolio investors, brokers.
wonderful, wonderful, great. So on the investment side, so it could be a person like me and you who has saved, we have saved some money and we want to invest in the market. We form a part of retail investors. They are also institutional investors, right? Like domestic institutional investors, like insurance companies, pension funds, mutual funds. Okay, they are in excess of capital. All right. So remember the term. There are some people who have excess capital with them. Okay, and they are looking for opportunities to invest and get better return on those investments. Now, on the other side, who are the people who will take these investments?
the companies whose shares are listed
Yes, companies, right? Why do companies need money?
to expand their business or to expand the capital base.
Absolutely. So different companies that are listed and traded on the market, they need capital, right? They need capital for expanding their business, to start a new venture or something. Example, let me take some few examples. Let's say it could be a company like Tata Motors who wants to launch, a series of electric vehicles in the country now. Okay, Tata Motors will need huge capital to set up those plants, to procure batteries, to have manpower, to have distribution network, right? There could be, an FMCG company who is into manufacturing of, let's say, what do you say, chips or whatever, soaps, and almost these products are used by almost each and every person in the country, right? And if they want to set up a new plant, a new distribution channel, huge amount of capital is going to be required, right? So on one side we have investors, on the other side we have companies. There, on one side we have people who are in excess of capital, on the other side we have companies who need capital. Okay, and securities market is a place where both these buyers and sellers of securities come together. All right, they come together, they exchange hands, money flows from here to here, securities flow from here to here. All right, so this is how securities market in a simple parallels, I tried to explain. These markets are nothing but place where companies and investors, they share securities and the money. All right. This is how, a country like India is developing. All right, we talk about 7%, 8% growth rate in India. Yes, the GDP is growing at such a high pace. It is possible only because companies are able to get that capital from investors. Okay, if there was no securities market in India, just imagine companies would have been, waiting for the funds, or they would have been dependent on some foreign investors for raising these funds, and probably they may not have been able to expand the businesses so fast. All right. So thanks to securities market that was set up way back, in the previous century, and today we are bearing the fruits. So we are taking the advantage of these products that they were launched. Normally, we classify the markets into primary market and secondary market, and I'm sure your course will also have this classification. What do you have in primary market? When you say primary market, it is for the first time these companies come and tap the market. Okay, for the first time when companies come and raise capital, that is called as primary market. Now, companies can tap equity or debt. Okay, it's not necessary that every company wants to sell equity. Okay, they can participate in the securities market. They can raise funds in the form of debt also. Okay, what is debt? simple loans, right? Somebody needs to buy a car or somebody needs to buy a house. What do? We go to a bank. What does the bank say? All right, we will give you money. Okay. You need to make some down payment that is going in your own capital, and the remaining portion we will fund you. When we fund you, that is called as the principal, the funding that is done. So let's say I want to buy a house of, let's say, 1 crore rupees. Okay. And let's say the banks gives me, promises to give me a loan of 80 lakhs of rupees. 80 lakh is my principal amount, right? I have to pay, let's say, a home loan interest on that. Let's say today the home loan interest is in the range of what, 9%, right? So 9%, 8 nines are 72. So 72,000, 7,000. Whatever is the EMI amount that comes on a monthly basis, I have to pay as interest, right? So in debt formulas, we call this as coupon. Okay. What we call interest in a home loan or a loan product, we call it as coupon. All right. There's a tenure. The bank will say that I can't fund you for more than 20 years. Okay. Or if it's a car loan, the collateral itself is not so, it's a limited duration period. So the bank will say probably I will not fund you for more than 5 years. Okay. So that is something we called as tenure. All right. In debt, we call these as debt products. Companies can go to banks or they can go to any financial institution to negotiate these type of loans, or they can raise bond products or debenture products. Okay. What are these debenture products or bonds? These are nothing but long-term or short-term loans only. Okay. So there are various debenture issues that keep coming up, and the companies, they don't have to sell shares or a part of their equity, right? They can do that in the form of debentures or debt products. In India, this can be done, as well as outside India. Reliance or there are some other companies also who tap this opportunity of raising funds from foreign markets. Okay, not just in India but internationally. Why internationally? The rate of interest that you'll see probably in India and the rate of interest that you'll see in the developed economies are way different. Okay, probably in the US markets, US is having a lot of inflation these days. So anyways, but it's still lesser than India. They may be able to raise loans at the rate of 4% or 5%, but the catch is it's a dollar denominated loan. When it's a dollar denominated loan, what will happen? In case of external commercial borrowings, these dollar denominated loans will have to, are subject to currency risks. All right. So the interest payment or the coupon that we were talking about is going to be repaid in dollars. All right. So every time you'll have to convert rupee into dollars. When the principal comes, it has to be converted from dollars to rupee and put into business. And when you repay the entire principal amount at the end of the tenure, again, it is going to be have to convert it to dollars. So the rupee dollar fluctuation is going to be of great importance when you go for ECB. So Reliance, why it is doing so? Probably it is using this funding for some other markets. All right, they are not bringing these funds to India. Who knows? I don't know. Maybe you can probably try to do a case study of what Reliance is actually doing with the funds that are raised through ECBs. Okay, but yes, these are also some of the opportunities that are there in today's securities market. Coming to equity, and probably equity is one of the popular options, or for retail investors. We keep hearing these days, so and so IPO has been launched. This IPO is there in the market, is going to be listed. Today is the listing day for the XYZ IPO. All right. So for the first time when companies raise capital, we call it initial public offering, and I'm sure each system. Okay. For the first time when companies sell a portion of portion of their equity and raise funds through general public. Okay, we are not talking about angel investors. We're not talking about venture capitalists. Okay, when equity dilution happens at that stage, there are different stages when equity dilution happens. But when this dilution happens at a stage where the retail investors are also included. That is, the shares are also offered to liquid retail investors. We call it as initial public offer. Similarly, it's not the only time that companies have to raise capital, or they have to sell their shares in the form of IPO. Again, if a company feels that they want to tap the securities market and sell equity, try to raise funds from retail investors, they can do it in the form of FPOs. Then there are rights issues. All right. What are rights issues? Anybody?
Issue of shares with rights, like we have the voting rights in the company. For example, if you have certain stake, and then if the AGM occurs, then we can vote like what should be done in the future plans of the company.
Okay. Anybody else? What are
So
rights
where
issues?
the existing shareholders get a chance to buy shares in a proportionate amount.
Wonderful, great, superb. So rights issues are issues, public issues, where the existing shareholders of companies, okay, they are given an opportunity that, see, you hold our shares already. The current market price, the shares are being traded at, let's say, 1,000 rupees in the market. Here is a deal. Okay, what we do is you can take some extra shares from us. Okay, we will allow you some extra shares at, let's say, 700 rupees or 800 rupees. Okay, that is at a discount discount to the market price. Okay? So that is called as a rights issue, okay? And it is offered only to existing shareholders. Then we also have preference issues, right? So preferential allotment also happens. That is, let's say companies feel that my requirement to raise capital is not like 1,000 crores or 200 crores or so. I just need, say, 50 crores or maybe 100 crores to raise. And instead of doing a public issue, instead of doing a rights issue, let me do one thing. Let me go to some select investors, select private equity investors, and raise my capital. That can be done through a preferential allotment. Now, companies, Indian companies, okay. Of course, all the companies that we see that are traded are Indian companies on the NSE and BSE. But these companies, these Indian companies, can also go abroad. Okay, they can also get listed on the US stock markets. Okay, there are some companies which are listed on the New York Stock Exchange as well. Can you name these companies?
OYO.
Okay. Any other examples? We call it
ICICI Bank, like for one example.
Right, ICICI Bank is one of them. So how the way it works is, you first of all have to be a company that is listed on the Indian Stock Exchange. Okay, you have your stocks, your company stock should be traded on the domestic exchange first. Then only you can do an ADR. That is, you can get listed on the US stock exchanges in the form of ADRs, American Depository Receipts. So these are called as depository receipts. All right. There are many companies, like there are a lot of IT companies, Infosys, TCS, Wipro, and these ADRs are traded on those geographies as well. We have banks like Axis Bank, ICICI Banks. They are also traded. Okay. So do one thing, after this session, probably you can do a preliminary research on what are the different ADRs in the market. Okay. And ADR means A for America. All right. So these are only in American stock exchange. But there's no such limitation. Companies can go to other geographies also. They can go to UK, they can go to Australia, and they can tap those exchanges also. They can get listed on those securities market also. We call it as GDRs, Global Depository Receipts. All right. Now let's increase our pace. And there are also hybrid instruments, okay, which are nothing but debt, a mix of debt and equity. Okay, I'm sure you will learn about them. Let me give one example. When we say debentures, these are non-convertible debentures. So when we go to convertible debentures, they become a hybrid instrument. That is, a debt product gets converted to equity at the end of the tenure. Right. Then we have FCCBs, FCEBs, and all those products. Okay. Let's quickly go through this public issue. Okay. With that background, this background is very important because sometimes I just directly start with some of our certification slides, and people say that, oh my God, what are these, all these certifications? So this background is very important for you to understand, what are the different certifications that NISM has, and we'll talk about it at the end of this session. See, we have this public issue process. I'll not get into much detail, but remember one thing: whenever a company decides to go for an IPO, the mandatory requirement is to do a due diligence process. Okay, an entire due diligence and the drafting of red herring prospectus. This red herring prospectus, okay, DRHP, draft red herring prospectus, is a mandatory requirement. Okay, this document has to be filed with SEBI, or this practice is actually international practice. If you go to even US markets, you'll see that the US SEC requires you to file a DRHP. Okay, so that exercise needs to be done. Now, the companies like Tata Motors, TCS, and pharmaceutical companies, or FMCG companies, they are not experts in doing all these things. So what these companies need is they need a merchant banker, okay, an entity who can do this exercise for them. So companies need some experts who can do this, and these entities, this intermediary is called as a merchant banker. Merchant banker is an entity that is going to help companies do that due diligence, file the DRHP, do the pre-marketing, the road shows, everything for this particular IPO. All right. So merchant banker plays a very critical role and help companies to raise funds either through an IPO or private placement, or some other means, debt issue or debenture issue. All those opportunities are there. So merchant bankers are experts. So this is one important career opportunity that I just told you in securities market. Okay, and trust me, these are really high paid jobs. If you're working in a merchant banking, you need to understand the product in and out. All right. You need to be an expert in due diligence. You need to expert in because just understand this. Who is this merchant banker going to deal with? Is going to deal with the promoter. Okay, a promoter like the promoters of different companies like Paytm, Oyo, right? So you're going to deal with the CXOs and promoters and the board of directors of companies, right? So your communication skills, your understanding of the product, your advice is going to be really valuable. Okay, so these are the skills that probably you can think of improvising in your 3 years course, right? So at the end of this public issue, I think you can probably you'll see that the listing happens. There's pricing and allocation. There's a book building process in the case of variable price or IPOs. So all these things, I'm sure you'll learn about this. But remember, the merchant banker is a very important entity, and like I said in the beginning, each and every intermediary requires some certification. So merchant banker is also required to clear the NISM Series 9 merchant banking certification. Okay, so we have one certification that will help you, step into this career opportunity if you want to, get into this space, right? By the way, public issue is just one of the slides I put up. Again, I would like to report merchant banker is not just into IPOs. They are also into private placements. They are also into mergers and acquisitions. So it is possible that you probably may get into merchant banking, and you are probably negotiating deals between companies, right? Whenever they are going to buy and sell companies, right? So these are also different things that a merchant bankers do. So primary market is done. I think, I don't think I should spend more than that time. I think we have 10-15. Okay. So coming to secondary market, I'm sure this is the most popular thing, and I'm sure people who are having demat accounts here, they would have they already know what these terms are that are there in the on the slide. We have different products, different securities, shares, preference shares, warrants, bonds, debentures, convertible debentures, derivative products like futures, options, swaps. All these are traded in the market. Okay, it is important for you to understand each and every product, right? At the end of this this 3 years course that you are going to do, the trading process. What times do our markets open, guys? Anybody?
9:15.
9:15.
9:15.
9:15, and up to what time?
3:30.
3:30.
9:15 to 3:30. Wonderful. These are equity markets, remember. What are the timings for derivative markets?
Will be from 10 a.m. to 6 p.m.
No, it's the same, 9:15 to 3:30. Okay, equity derivatives. So there are two segments: the cash segment or the spot market also is what we call the spot market, and derivatives market. Equity derivatives market are open from 9:15 to 3:30. But these are equity markets. We also have other markets. We have currency markets. Yeah, we have currency. Do you know that currencies are also traded on the Indian securities market, the Indian stock exchanges? There's a different segment called as currency derivative segment. That market is open up to 5 p.m. Okay. We have products like USD INR. We have British pound to INR. We have Japanese yen to INR, and we also have what did I miss? Euro INR. Okay, so these are the four currency pairs, and there are also cross currency pairs. Okay? And we are not talking about buying and selling of US dollars directly. We are not talking about spot markets. These are derivative segments. Okay, so that derivatives of there are futures and options of these currency pairs. Okay? That market is open up to 5 p.m. And we also have commodities market. There's another segment, right? We have different commodities like we have crude oil, yes, energy products like crude oil. We have natural gas. We have metals. Okay, in precious metals we have gold, silver. Metals we have copper, aluminium. All right, so these are there. Then agri products, turmerics, different spices. These are all traded on this market. Okay, we have a different exchange called as NCDEX. We have MCX for that. Okay, for the currency derivatives segment. All right, these markets they go on late in the night as well. Okay, to 11:30. All right, so when somebody asks you what are the market timings, the equity market is open up to 3:30, but there is currency derivatives market as so, and commodities market also that goes on. All right. These are certain terms. If you are investing in the market, I'm sure you should be aware of this market order, limit orders, stop loss orders. You know what are the different types of orders. Then at the end of your trade, you also receive a contract note. All right. So these are certain things that you should be aware of. We as NISM, what we have done is we have a simulated lab at NISM, and the previous batch they visited, they had a chance to get their hands on this lab, where you don't need to put any money. We give you virtual money like 1 lakh rupees or 2 lakhs of rupees, and you can buy and sell shares. You can try these different types of orders. You can look at probably if you have some more time, you can take advantage of a market metaverse course. That is a 1-day hands-on course, which will also talk about risk management in the markets. All right. So it's a very good opportunity. In case some of you are interested, you can definitely pay a visit or get in touch with us and probably try your chance at getting yourself exposed to these kind of simulated trading environment. All right. Now, in the secondary market, in the front end, we have dealers, right? And as investors, we can also trade directly. But there's also something that goes on behind the scenes that is called as clearing and settlement process. So when we buy and sell shares, how much time do you think it takes for these shares to come to your demat account? Any idea? When I buy this mobile phone, let's say I buy this mobile phone online, how much time does it take for it to get delivered?
1 day or 2 days max to max.
1 or 2 days. Okay. If I go to a retail store and I buy it from there, how much time does it take?
Spot. It is spot.
On the spot, right? So if I buy some 50 shares of SBI today, right now the market is open, right? So how much time does it take? How much time do you think it takes for me to get those SBI shares in my demat account?
Earlier it was T+2, now it's T+1.
Right. So it takes T+1 day today, okay, for these shares to get settled. Okay. So remember this term. When I buy, the trade is confirmed, but for the settlement to take place, It takes T plus 1 day. All right. And there are a lot of things that go on behind the scenes. That is what, that is what we call as back office. Okay. There are a lot of things that go on in the back office, and there are different back office profiles also, especially in the clearing and settlement of trades. Now, talking about career opportunities in the secondary market, see, if you are a dealer, all right, if you are a dealer, you have to be well versed with these products that are there on the screen. You should know how to trade. You should know what are the different features of a bond. You should know what are futures, options, how do you trade, what are the different option trading strategies. All right, so different strategies play a crucial role in derivatives market. All right, so if you are a dealer, if you're thinking of becoming a dealer to start that career opportunity, you need to be aware of all these products. If you're not so well with your communication, or if you are not so good at dealing with customers directly, you don't want to be in a customer facing role, you can also have a back office role, that is in the clearing and settlement process. All right, it's behind the scenes. You settle the trades of different clients, look at the risk management aspects, make sure that there are no violations of the regulatory compliances. So all those things are a part of the clearing and settlement process. All right. Great. So I think, with that a little brief, let me just switch my gear to, different intermediaries. And the first one is not actually an intermediary, but rather a market infrastructure institution. Okay. We call them MIIs, a stock exchange. Everybody knows what is a stock exchange, right? Have you been to the stock exchange building? Have you seen it?
Yes.
Yes.
Yes, right. So it's one of the iconic buildings that we have in Mumbai, the Bombay Stock Exchange as well as the National Stock Exchange. There is also another third exchange called as Metropolitan Stock Exchange. And that also happens to be in the Bandra Kurla complex. So we have 3 national level exchanges today: BSE, NSE, and MSE. All right. What is the function of a stock exchange? So when we talked about buying and selling of shares in the beginning, remember the first slide, the securities market is a place where buyers and sellers come together. Okay, this is the place where they come together to, right? All right. So exchange provides that mechanism. Exchange provides that online facility to raise funds and for the investors to invest. Okay. However, if I go to a stock exchange and tell them, first I need 50 shares of, let's say TCS. Can an exchange give it to me directly? No. The answer is no, because exchanges don't deal with investors directly. They deal through their trading members. Okay, and these trading members are called as brokers. Right. So while there would be not many opportunities, career opportunities in a stock exchange, if you happen to get into a stock exchange, really, that's really good. But trust me, the highest amount of learning that you will get is through stock brokers. Okay, if you're working in a broking firm, every day is going to be a great opportunity to learn. Okay, typically brokers are divided into front office, middle office, back office. What is the core business of a broker, by the way? The core business is to provide a platform to buy and sell shares. Okay, long back, these brokers, they used to, if you'd have seen some of the movies like, no, I don't remember the names. There was some Abhishek Bachchan movie called Guru, yeah, and there was one recent web series called, I think, Scam or something that came on, one of these OTT apps. Okay, you would have seen how right. So you would have seen over there how the actual trading used to happen. Okay, it was an open outcry method. All right. Now we have shifted to electronic mode of trading. All right. So brokers provide that platform to deal in securities. Okay, that is, they facilitate the buying and selling of shares on behalf of the exchanges. Okay. So in a front office is typically the dealer desk, and the dealer desk is responsible for so dealers typically they will place the trades on behalf of clients, or they can also do prop trading. Okay, prop trading means proprietary trading using their own funds. All right, the broking arms firm. In the back office, we already told you clearing and settlement process. The risk management forms a part of middle office. Okay, so this is typical, traditional function of a broker. But trust me, there are some specific rules, really good quality rules. Let's say brokers do a lot of other things also. They write research reports. Okay, they hire research analysts. All right, the ones that you see typically if you switch on CNBC TV 18, and they'll probably interview somebody from a pharma sector, somebody from an IT expert, or somebody who's a technical analyst who will talk about charts and resistance and support levels. Okay, there could be others who will be handling, who would be an analyst at a macro level. We'll talk about different global macroeconomics. Okay, so these are different types of analysts, and brokers will also come out with different analyst reports, okay, research reports on a specific stock or a specific sector as well, okay, or at a macro level. All right. So this is a very good opportunity, and like I said, so the back office people are required to clear the SORM certification. Here, the research reports, the people who are research analysts are required to clear NISM Series 15, the research analyst certification. All right. So it's a really good opportunity in case you're looking at a core finance profile dedicated to securities market. A research analyst is one of the most lucrative profiles. Okay. Now brokers, what else do they do? They have to take care of investor grievances, IPOs whenever they come. They launch through their own platforms. They also sell mutual funds, portfolio management with different PMS schemes are also sold. So brokers, I typically call them a supermarket of securities market. Okay, a supermarket. When you go to a broker's office, you'll probably get all the products that are available in the universe of securities market. So that's why I call them brokers. So this is why I said that brokers are going to be the best learning platforms. So if you want to start a career, do think of getting into a broking firm. All right. Next is the custodian, and most of you may not have heard about this term, but typically custodians are also large banks like HSBC, HDFC Custodian Services, Axis Custodian Services. These are also large banks who provide custodian services. What are custodian services? So institutional investors. Now, as a retail investor, see, I have my own demat account. When I buy shares, the shares will come on a T+1 basis to my demat account, and the shares are also in my custody. The cash is also in my custody in my bank, right? However, institutional investors have bulk requirements, right? So they appoint a entity called as custodian who will take care of the funds as well as the stocks. All right. So when we talk about let's say mutual funds, okay, let's say it's a XYZ mutual fund company. A mutual fund will only decide which stock to buy, which stock to sell, okay, but they will never have the custody of those shares. Okay, the actual custody is held by the custodians. Okay. Merchant bankers, we have already talked about this. Merchant banker helps companies raise capital, especially in an IPO phase. If you are a merchant banker working in an IPO phase, you will be required to clear the merchant banking certification, the NISM Series 9. Trust me, another good, fat salary kind of a profile. But at the same time, it's going to be really hectic for you. You probably maybe whenever it's an IPO, whenever there are deadlines, whenever there's a huge target to raise this much amount of capital or funds from different players, these are going to be long hours that you'll need to spend. There's a lot of travel that you'll need to do from here to there, from one investor to another, making pitches, road shows, and whatnot. Okay, so again, merchant banker, a very good profile. And I think if some of you, I'll be happy that from your institute, if they join the merchant banking industry. Next, we have asset management companies and portfolio managers. So AMCs and portfolio managers. This is nothing but I'm talking about two different products: mutual funds and PMS. Okay, let's park the PMS for a bit and talk about mutual funds. What are mutual funds? Anybody? All right, never mind. See, I can invest in the markets. I have access to markets. I have my own demand account. I have a brokers platform. I can buy shares. I can decide what to buy. I can decide what to sell. Whether that decision is going to be right or not, only time will tell. Because in case I buy a XYZ share and it doesn't turn out to be a good good deal, I think I'll lose money in the market. Yeah, right. So I don't consider myself to an expert in the market, right? And I'm sure people like us who will be probably doing jobs or will be doing some business or will be busy in our own affairs. We don't have time to look at the markets. If you have to invest in the market, you have to study the market at a macro level, at a micro level, at a company level. You have to analyze. You have to speak to the management of the company. Attend their analyst calls, and you have to do a lot of exercise. A lot of research to decide whether it is the right time to buy or sell in this particular stock. Right. So these things are going to be challenging for the retail investor like me. All right, and that is why what I feel is I should rather investing myself. I would rather say that I will give my funds to a mutual fund company who has access to good quality research, and they are going to be pooling this money and investing in the market. They have good quality fund managers who have lots of knowledge in the market as well as skill set of getting good quality returns. So mutual fund is nothing but a retail product which will help you invest in the market, and you don't have to take the risk of investing directly. Having said that, nothing is risk free in the equity markets. All right, so everything comes with a a disclaimer that mutual funds are subject to market risk. Please read the offer document carefully before investing. All right, so that is mutual funds. What I would like to say, yeah. So there is good opportunity of also becoming a distributor in mutual funds. Okay, so there are both ways. One is you can get an opportunity in the mutual fund space as a fund manager. Okay, so maybe 10 years, 15, 20 years down the line, if you are on the right path, you can also think about being a fund manager in one of the top mutual fund companies. Okay, that is somewhere you may want to go. You can be a research analyst. We talked about research analyst on the broking slide. You can be an analyst. You can be a analyst, a sector-based analyst, or you can be a specific company specific analyst. And because fund managers, they have their own in-house team of analysts. Okay, they just don't take decisions based on the fund manager's intuition. All decisions have to be backed by good analysts report. Okay, so they have a good team of analysts, and you can probably get into those teams as well, right? So these are really good finance profiles. On the other side, if you want to be on the marketing side of mutual funds, you can be on the marketing side. You can be on the distribution side of mutual funds. Okay, so in distribution, there is a mandatory certification, that is NISM Series 5A, mutual fund distributor certification. Right. So if clearing this certification and taking a license from AMFI, it will help you become a distributor, and you can do distribution of mutual funds to and you can suggest which funds to invest into your investors, right? And you can start earning commission. It's a good passive way of investing, or some other good passive income to earn in the markets if you want to do that, right? And similarly, like mutual funds, we have PMS schemes also, that is portfolio management schemes. Okay. However, portfolio management itself is a different area and comes with a lot of risks. And that is why SEBI has kept the minimum criteria of investing in portfolio management schemes to 50 lakhs of rupees. Okay. However, mutual funds are retail investments, and you can start your investment as low as 500 rupees. All right. Then we have depository participants, which are nothing but, so like an exchange appoints a trading member. So the brokers, what we call as are trading members. Similarly, a depository appoints a depository participant to look into the different aspects of demat accounts. All right. So there's another DP. Most of the brokers actually work as DPs. So in case you work in a broking firm, it is possible that you are on the DP desk as well. Then we have RTAs, share transfer agents, who keep a record of all the investors and holders of the securities, their bank account details, their nominations. Then we have clearing members, bankers to an issue. One important is the credit rating agency. So yeah, so this is also one of the good profiles that you can think of in case you want to get into this market. Credit rating agencies. Okay, what they do is they give credit rating to each of the loan or debt products that we have. Okay, they determine the chance of the probability of defaulting. Okay, that is all the essence of a credit rating agency. They come up with different ratings. We have CRISIL, we have ICRA, we have CARE. So these are different rating agencies, and it's a profile that is very similar to research analyst. In a research analyst, you are going to examine the equity, but here we are going to examine the debt of the particular company that is based. Okay. And finally, we have the market regulators, all right, which is SEBI. And to a certain extent, the Reserve Bank of India also plays a role, because in money markets, the Reserve Bank of India is a regulator. The currency markets also, the forex, particularly in spot market, Reserve Bank of India is the key regulator. All right, and since these are all companies, they are subject to rules and regulations of the Ministry of Corporate Affairs. Right. So in a brief, I think I'll pause over here, and this is what I have mostly covered in the past half an hour, 40 minutes. The different employers that are there in securities market, and the different types of profiles that they will offer you. Okay, some profiles would be not very highly paying, but in the long run they will take you to really good quality profiles. Some profiles will start. They're really rich quality profiles like merchant banking, research analysts. These are going to be really good, going to shape your career to, really nice kind of a career. All right, so that is where I would like to pause. And these are the different certifications, by the way. Rather, I'll just show you this particular slide. Yeah. So, just probably 5 minutes more. So the different intermediaries that we spoke of, all these intermediaries, anywhere you want to work, you need to clear at least one certification or the other. And I'm sure, many students from HR have seen that they have been taking these certifications in the past. So the ones that I recommend, so there are many certifications, but the ones I just told you, I'll just probably point them out in this slide. See, the first one that I recommend you to take is the Securities Market Foundation at number 17. Right? Number 17, the Securities Market Foundation. Since you are all from the first year of your respective course, first year graduation course, to understand these markets, to understand the basics of primary market, secondary market, derivative market basics, mutual fund basics. Okay, so these 4 to 5 aspects are very nicely covered in the Securities Market Foundation workbook. All right. The other one I suggest, when you go to second year or probably in the third year, these 2 certifications at least you should take. The first one is the mutual fund distributors. Okay, try to get an understanding of mutual funds. This particular certification will cover all the aspects of mutual fund from the distribution angle. Whether you want to distribute mutual funds in the future is a different story altogether. But trust me, when you go out in the job market, when your monthly salary, the paycheck comes to your bank account, trust me, you'll be puzzled. What should I do with this now? And you will be looking for investing, learning about mutual funds. The knowledge that we'll get about mutual funds is going to be very, very helpful for you at that point of time. Okay, so either from an intermediary perspective, or if you want to from an investor's perspective, you should take up this mutual fund distributors certification. Next, I am not sure how your course is designed, but I think it will also cover some aspects of derivatives, futures, and options. So, in case you are interested in to understand this, these products, the NISM Series 8 Equity Derivatives is the certification. All right, at number 12. Then I talked about merchant banking. Many of you may be thinking about getting into MBA course after this. So in case you're going to do an MBA finance, these certifications are really going to be helpful for you. Okay, the merchant banking, the research analyst. You spoke about a research analyst. The last one, that's number 20. This is going to be, this will help you, understand how do they value company, why the particular share is getting traded at XYZ price only, the DCF method, then different ratios that are there used by analysts. So all those are covered in the research analyst certification. You guys are from first year, but again, let me just at the cost of saying, we also have launched different certifications on PMS, that is portfolio management scheme. In case you are interested, then go for that. There's new age of investing that's there called AIF. So today, you would have seen what is that show called as Shark Tanks. Yeah, so a lot of venture capitalists are investing, and it's become popular these days. SEBI came up with a regulation called AIF regulations, and we have 3 categories of AIFs. So the venture capitalists actually fall on the AIF category 1. So we have different certifications for alternative investments funds, so category 1 and 2, and then there's I think 1 and 3 and 1 and 2, and then there's another exam for category 3 also. Okay, so we have certifications on those as well. You would have heard about insolvency board, yeah, IBBI, right? So there was a time when in India they used to say that you can start companies, but you don't know how to close down a company. Right. So today we have IBBI, the insolvency board, and NISM also conducts the valuation exam for the IBBI board. Okay. So these are different certifications you can think of taking up. Those exams are going to be very tough, by the way. What you can start off with through the Securities Market Foundation, the mutual fund distributors, the equity derivatives, these merchant banking, research analysts. These are all the certifications that you can think of. And the fees and all is anyways there on your screen. The passing percentage, negative marking, everything is there on your screen. The study material is absolutely free of cost. Trust me, you can just simply go to NISM website, and under the certifications tab, you'll find the study material section. You can download the PDF of all these books free of cost. Okay, and these are updated every year. All right. Every year, all of the certifications get updated with the latest information, except for mutual funds, which is updated every 6 months. Okay, so every 6 months we have a new workbook of mutual fund distributors. All right, so that is where I would like to stop. We have test centers across India. In Mumbai, we have multiple test centers where you can simply go schedule the exam online. All that you need is a PAN card, your Aadhaar card, and your photograph, in case you want to take these certifications. All right. So I think I'll pause here, and I'll let some of you, put some questions if you have them. Please feel free to ask questions. Either just unmute your mic or put it in your chat box. I hope I have covered it in 1 hour. It's almost 10:45 now. Great. Thank you, and I look forward to some questions.
Yes, sir. The floor is open towards questioning. We have quite a few questions in the chat box. I'll address the first one. So it goes like, is it beneficial to invest in index funds since they are less risky and less volatile than mutual funds? Is it profitable in the long run?
Okay, so index funds and mutual funds. So there's no difference. Okay, first of all, index funds are nothing but mutual funds which invest in the index. Okay, now the only advantage here is these are called as passive funds. Okay, so index funds are nothing but passive funds. That is, the fund manager does not have much say in which stocks to invest now. Okay, when I say I'm going to invest in Nifty 50, okay, I know the universe is going to be my 50 stocks, right? So this 50 stocks, the fund manager can't decide now that instead of SBI, I will take the stock that is there from the other than those the other 50 stocks. Okay, so the fund manager's discretion is very less, and that is why these are called as passive funds. And the only advantage is that the cost is less. Okay, so in case of an index fund, the cost is less. It's a passive category. So if you are mostly looking at returns that you want to get, what the market returns are there. So whatever Nifty return will be there, some plus or minus maybe 5 basis point, 10 basis point is the return that you will get. Okay, so internationally, if you ask me, there has been a lot of fancy for index funds rather, because they say that sometimes the passive funds, probably give you good quality returns rather than the active funds, where the some of the fund managers, they possibly miss out on beating the benchmark sometimes, or trying to generate that alpha that is there. Okay, but anyways, you don't have to worry that much if you are just a new new investor in the market. You can trust the fund manager, you can trust the index, wherever the comfort you find, you can probably invest. Okay, go ahead. I think we can take the next question.
Yes, sir. So we see that you've spoken quite a lot about the traditional market. So what are your views on cryptocurrency? Is it safe to invest in cryptocurrency?
Okay, so straightforward answer is I'm not an expert in bitcoins and cryptocurrency. Again, you all know what happens. There was a lot of bubble that was there in the crypto markets, and I think the bubble has well burst now, and people are aware. See, for my personal opinion, I personally would stay away from something that is not recognized by not recognized by the law of the land. Okay? So the amount of risk, as it is, you're going to carry a lot of risk in your investment. On top of that, why do you want to carry a risk of getting a product like this banned? Okay? So personally, I would like to stay away from this kind of, and these are not honestly, these are not asset classes, right? So, okay, I want to invest in a currency, I will probably invest it through US dollars and euro currency. Why would I want to get into the crypto side of it? Okay, my personal opinion, I am not an expert on cryptos and all those fancy kind of Ethereum and all those currencies, but I personally don't consider them as an asset class to invest. Again, it's my personal opinion. On the technology side, yes, the distributed ledger and those type of technologies are really nice. They're rather amazing, and they have good kind of applications in different facets of life. I'm sure in the next 5 to 10 years we'll see a lot of applications that will use in the technology that they use. But personally, as an asset class, I'm too skeptical about bitcoins and cryptocurrencies.
Yes. So the next question we have is, what are your views on ETF? Is it good to invest in ETFs rather than in mutual funds?
Again, the cost is the factor. Okay. When a fund manager is going to have his own team and is going to do a lot of research, there's a lot of cost that gets into it. So probably the total cost that goes into an equity funds, typically you'll see that it's in the range of 1.5 to 2%, or maybe sometimes 2.25% as well. Okay, and if the same thing you're going to invest directly on an exchange traded fund, this is the cost that you save. Okay, so but in the long run, see, if I'm going to get some 12% or 15% return from a fund, I don't mind, personally, I don't mind giving that 2.5% to a fund manager who is rather going to beat the index. As far as he beats the index, I'll be pretty happy. Again, it's a subjective case. ETFs are nothing but, more or less, you can compare them to index funds, and that's what, the cost is going to be a key factor there.
Yes, sir. So our last question here, it pertains to NISM. So is there any difference between NCFM and NISM certification courses? And what are the duration of these certification courses?
See, NCFM is conducted by NSC, okay, and they have been conducting since a long time. Unfortunately, the capital market regulator came up with this regulation, which I just showed to you on the first slide, SEBI CAPSM regulation. They mandate the mandatory certification are NISM certifications. So you will find similar certifications on NCFM side also, but then in case you pass them and you want to now work as an equity dealer and deal in derivatives, you will have to rather pass the NISM's equity derivative certification as well. Okay, so better to take only one certification, that is NISM certification. NCFM certifications are also going on since a long time in the markets, but the mandate is with NISM, so that's the difference. Duration of the course, so there's no specific duration. See, these are self-study courses. Like I said, you can simply download a PDF from our website. For example, the equity derivatives is, I think, 200 or 250 pages material. It all depends on you, how fast you read, how fast you grasp the concepts, how fast you, complete the preparation. So normally, if I'm already well versed with some of the concepts, I would rather take only 7 to 10 days to finish a 200-page study material. Okay. For a student like you, where certain concepts are brand new, they take time to seep in, to understand, to do your own research. So I would suggest that I have seen people at an undergraduate level, they may probably take 1 month or so, 1.5 months to clear one certification. Okay. You can target that. Probably you can take your vacation time. I'm sure you have the luxury of vacations. Once you are on the job, you don't get vacation. So during your vacation time, you can target one certification. Definitely, you can complete one. I'm happy to take more questions as well.
So do we want to go with more 1 or 2 questions?
Yeah, sure. Go ahead.
So yeah, in the backdrop of Adani and Hindenburg case, do you feel that the Securities and the Exchange Board of India is fully transparent, or are there certain political interventions in their operations, like if that affects its credibility? Are you open towards this question, sir?
No comments. I think that matter is already sub judice. I don't think I should be commenting on this.
Fair enough, sir. Neha, do you want to go with the next question?
No, sir, I think that's all the questions we have. I think we can move on. Yeah.
Great. Thank you very much. Thank you very much. I think you have been a really good kind of an audience. Although I couldn't, see you face to face, but nevertheless, I got the feedback, the answers that you guys gave, the questions that you have asked. It gives me a very good, feeling that the youth of this country is really talented, and I really wish you all the best in your future endeavors.
Thank you. Thank you so much, sir. This session has been extremely engaging and helpful in understanding a great deal about financial market, and especially your perception of securities, the investors, and the overall working of the securities market was incredibly beneficial. We thank you for all your time and efforts today. Thank you so much, sir.
Thank you.
Yes, sir. So as we step upon this enthralling journey together, I urge you all to seize every opportunity, to learn every chance you get, and to make the most of this time in your college lives. We are thrilled to have you here and are sure that you will make your loved ones proud.
Thank you for joining us today. We hope that you continue to contribute to this community's legacy and become virtuous leaders of an upstanding tomorrow. Once again, thank you, Mr. Nikhil Shinde, for your time, and thank you everyone for joining in. We hope to see you back again over here for another edifying session.
Thank you and all the best. Bye-bye.
Thank you so much, sir.